Good afternoon to all of you, and welcome to a panel discussion on cyber insurance hosted at Cyber Risk and Resilience Summit 2020. My name is Sony Anthony. Like Ankita said, I'm a partner with KPMG. I'm happy to be moderating this session, and I'm sure, like me, we all will have an enhanced view on cyber insurance. Cyber insurance is acting as a risk transfer mechanism used by organizations to protect themselves from losses arising due to cyber attacks. And we have seen increased cyber attacks in the recent past. And with this trend, the global cyber insurance market is estimated to exceed USD 20 billion by 2025. In India, close to 550 in cyber insurance policies have been issued over the last year. And this is expected to increase as cybersecurity is becoming a boardroom agenda across businesses. As the threat landscape evolves, organizations are realizing the need and importance of cyber insurance. And I think this session will get into a deep dive and also explore the various benefits of cyber insurance, the little challenges we have in understanding cyber insurance, and the way that we can probably approach in a meaningful way to avail an insurance policy for our organizations to mitigate the cyber risks at hand. And I think just moving on, I think Ankita has already given an introduction of the panel. I'm joined on this panel by esteemed members, Milind, Dominic, Prasun, Manoj, Srinivas from the industry. And I think to delve into the topic from the first question or a starter, I would like to first understand from the panel, do we believe cyber insurance is gaining traction post-COVID? And if so, why? And what do you think is, in your perspective, the India and global market perspective on cyber insurance? Question to Mr. Milind to start, and we can take it on from there to the other panelists. Yes, Mr. Milind.
Very good afternoon to all of you, and thank you for having me on this panel discussion. Sony, you also mentioned that there are around 550 cyber insurance policies which have been sold last year, and probably
Yes.
there will be more which will be coming in very soon.
Yeah.
But if you look from the point of view of the population of organizations who actually require the cyber insurance, you see for yourself, 550 is a very minuscule number.
Agree.
The second challenge that I see in the cyber insurance is, like life insurance or health insurance, unfortunately, cyber insurance doesn't threaten individual. It's a threat to the organization, and that is the reason why there is a lot of a collective decision which is being taken, and very few organizations leave it to an individual within the organization who is knowledgeable and understanding of this insurance to allow him to take this insurance. And the third thing that I would like to say over here is that one of the biggest hurdle is the reinsurance part. So I don't know after COVID how this reinsurance, the global agencies aligned with the Indian agencies, cyber insurance providers, will be looking at the market. And based on that, it will actually determine how many more people come forward to be able to take this insurance. As we go further on the panel discussion, I am sure there will be many more angles of this topic which will come out. But for now, it is like this that today also, in spite of last 4 months of understanding of this security threat, I don't think that organizations have yet taken it with that seriousness as to jumping towards the cybersecurity insurance as much as I expected when this pandemic started.
Thank you, Milind, for that view. I agree with you. The number of policies that we are seeing are very minuscule. It is in nowhere comparison to the number of organizations that are experiencing cyber attacks. And I think it is probably going to grow. But also wanted to get a view. Is COVID changing the dynamics of cyber insurance? Just like to hear views from Manoj, Mathan, Srinivas. Mr. Manoj, yeah, from your side.
Good afternoon all. So obviously, sir, the demand for the cyber insurance policy has drastically increased in last 4 months' time. And earlier, if you look into it globally, this product was growing at a 20 to 25% CAGR. Was expected to cross 20 billion by 2025. At this point of time, you would see that demand has notched up to say 30 to 35%. In India, this is one of the fastest growing products pre-COVID scenario because of the legislations and the contractual and other requirements. And obviously, everybody understands the real exposure is there, which leads to any kind of a business interruption. But COVID has changed completely the demand, because almost all the corporates are remotely connected, which they understand they are more susceptible to any kind of a cyber risk situation. So the exposure is really evaluated by each and every corporate. And by end of this financial year, you would see that, look, this product will have at least a 50% growth in India. That means that, look, we are expected to touch 1,000 policies. As you rightly pointed out, in the liability space, even the D&O has taken certain amount of time. After Satyam, we have seen mass buying of D&O policy. So is the case. India might be waiting for a large, claim, but already market has seen claims. And with the introduction of the cyber bills, the privacy bills in the parliament, when it becomes an act, obviously more corporates would be seriously buying. As far as on the retail side, there are various companies have come up with the product, and which is also sold, the retail cyber product. Every individual can buy. That is also picking up. The demand is huge for that product.
Thank you, Mr. Manoj, for that view, and I agree with you. It is rising, and from 22%, it's moving to 35%. We are also seeing new regulations that are going to drive this. PDPB has been there in draft stage. We have just heard there's a new cybersecurity policy 2020, which will also evolve and come in. We don't know how much of regulatory stick it will carry, which will push organizations to go in for cyber insurance. Just want to get views again from Mr. Srinivas and Prasun, your views on the current traction and what do you think from your perspective from a market in India and globe?
Right. So, Mr. Srinivas, would you want to go first?
Yeah, you can.
Okay, thank you. So, from our perspective, being a cyber security provider in the market, what we see essentially is that, in general, there has been a growth, not only in India but also globally. Post COVID-19, in cyber insurance as well as cyber security, products at large. And I think there have been many influencing factors, such as more adoption to the cloud, more reliance on third-party managed infrastructures, etc. That has been, major drivers to it. I would like to think that COVID-19 has done to digitization and cybersecurity what demonetization had done to currency. But it remains to be seen whether we actually see that within a few months happening. It has definitely, for sure, accelerated many-fold the changes that everyone thought would happen slowly over a period of years, and kind of I'd say compress the time in a very short amount. So let's see. All the effects are not yet noticeable. We do see trends, but let's see if this trend continues in the same way that digital currency had continued post demonetization.
Thank you, Mr. Prasun, for those views. I'd like to move on to another viewpoint. Should organizations just invest in enhancing their cybersecurity, or be selective on cyber insurance for specific businesses or specific projects? And the viewpoint I'm giving here is there are organizations, and I was in a previous panel which was talking about zero trust, and they were talking about this new technology architecture which will change the way of giving access to third parties, employees, user data, and things like that. So on one side, we are looking at enhancing security. On the other side, we're also thinking that security can be an issue, and therefore we need to go in for a cyber insurance. There's another take that we're also saying large organizations are not necessarily looking at cyber insurance for the complete organization. They're looking for specific businesses or some businesses or projects which have, let's say, an anchor point with a larger client who has mandated cyber insurance. So what's the take here? I mean, should organizations invest in security or look at cyber insurance? And if so, should they look at it from an entirety of an organization or just specific projects and, let's say, businesses?
So you want me to?
And I'll pass it on to Mr. Srinivas. Yes, I think.
Hi, Anthony. This is Srinivas Bhoosarapu from PFRDA, CISO PFRDA, and Cyber Research. Basically,
I think we lost Mr. Srinivas. I think he got a call on his hotspot. He's back again. Yes.
Yeah. Basically, if you look at cyber insurance, it started long back only. Now only we are talking about pandemic and those kind of things. It's not now. Long back only, we had a lot of discussions with various industries. If you look at in India, we have only 4 companies offering these products. Like if you look at Bajaj, Tata, HDFC, and SBI, only 4 are offering this product. And when I look at some of the National Cyber Security Strategy 2020, in few discussions, we understood that it is going to be mandated and more products is going to come. That is another area. And when you look at what are the things we should have to consider when we are taking cyber security, first is before entering into any cyber security policy, what we should have to understand, what are the parameters we should have to consider. That is very important. What is the scope of the policy? As you mentioned in the subsequent questions also, what are the inclusions, what are the coverages, what are the exclusions are there? That is major thing we should have to understand. And to get that, how you are going for underwriting of the policy. That is very, very important. And in that, once we got the underwriting, what are the clauses, what are the terms we should have to include, what is the level of trainings, what is the level of awareness, what are the different critical infrastructures are there. Like that, we have 10-15 parameters we are going to take into the consideration. Once we got the underwriting thing, as you are discussing, we are thinking only businesses. If you look at a lot of infrastructure like power systems, telecom systems, banking systems, e-governance systems, all are very, very critical systems are there. So if you look at any RFP now, in recent RFPs, if you look at, all are described with if you have cyber liability insurance or cyber security policy with you or not. If you are offering that, then only that will be considered. So that way, a lot of things will be taken into the consideration. And when you
sorry, continue. So Mr. Srivastava, we'll come back to those aspects because we have a couple of follow-up questions exactly on the tone that we are speaking about. I'd like to get to Mr. Mathan and get back on his view on whether investing in enhancing security is something that organizations are doing, or being selective on cyber insurance and assuming cyber insurance will take care of some aspects of challenges to business.
So insurance potentially is to address the unknowns, right? So that doesn't take away the core charter of delivering your primary duty being a CISO of a company, to ensure that you protect the organization with the fortresses, defenses, monitorings that you have put in place. So that is only to take care of the blind spots. So to cater to situations where there are blind spots that you would come across your way in the cyber threats that are facing us as corporates, is where largely insurance is taken. A corporate cannot take the call that as because I have an insurance, I will be lax to the cyber security measures that I have put in place. That obviously, if you go to the set of firms that are supplying you with such policies, the cost of such insurance will be mammoth. Right, so an organization which is going to demonstrate that I have zero investments or partial investment in cybersecurity posture and wanting to acquire an insurance, obviously the cost of insurance is going to be higher for a far more better governed and protected infrastructure. So insurance is not going to take away the need for you to secure your corporate. That's the first and foremost.
Thank you, thank you, Mr.
So
Mathan.
I just
That
add
leads,
over
in
here.
fact, it leads. Sorry, Mr.
I'd
Milind.
like
Go
to
ahead.
just add over here. The second thing is that insurance claim can be what we say disallowed. So from that point of view, also, regardless of whether you have insurance or not, your cybersecurity investment has to always go up. It has to be always aligned to the risk that you have for your organization. So just depending on the insurance is not good enough. You have to take care of the cybersecurity from all the angles. And as Mathan said, yes, for the blind spots, we also have that insurance. For the residual risk, we have that insurance.
So, Mr. Milind and Mr. Mathan, thank you for that viewpoint, which means to say, do organizations really understand some of these new terminologies of cyber insurance? For example, we have cyber coverage, exclusions, inclusions, and while we understand premiums, claims because of our relationship with insurance with respect to life and motor and travel, aspects of cyber actuarials and cyber underwriting, these things, are organizations really geared up and are they understanding where they fall into picture? Or is it that they're depending on somebody else to support them and they're just going in for a policy today? Maybe tomorrow, a year down the line, they'll be more mature in their understanding. What is your view here? And I'd like to view from everyone on the table. We'll start with Mr. Manoj.
Yes, sir. So, Indian market, whenever there is a new product which is launched, which we understand that product in a very, very deep manner. So, Indian market is matured enough to handle the all the aspects of the insurance product, whichever product if you take it. The maturity in the practical sense might not be up to the mark when it compared with some of the the matured markets like US and all. So every corporate in India understands the coverage, conditions, and exclusions. When it comes to customization, obviously the CISOs and the CROs will list down the exposures of the organization, and they will ask their consultant to list down the coverage, what is there under the policy, and to what extent which we can carry out the customization. That's the way most of the organizations in India do buy this insurance policy. So when it comes to the coverage, there are shelf products which are available. Those coverage might not be, 100% responding to the all the exposures. Especially we have seen when we have written paper for various, the industries like the banking industry and all. We have seen lots of exposures which were not fitting into the policy. So the product is to be customized with respect to the exposure of that industry and with respect to the exposure of that say company. Say, as you rightly mentioned one point, whether conglomerates, when they look into it, they have got different kinds of business out there. Whether one policy will be responding to all the requirements or subsidiaries do buy, they have to look into different kinds of policies to for their exposures. That's the kind.
I think we lost Mr. Manoj. Yeah, so I get the view, Mr. Manoj. Yeah. So I think, see, from an insurance broker's perspective, the viewpoint is that yes, organizations do understand these terminologies. If I may check with Mr. Srinivas, what is your view? Do you think organizations really understand these various aspects of cyber insurance, like inclusions, exclusions, aspects of, let's say, underwriting or cover premiums that they have to determine?
Yeah, Anthony, if you look at the cyber liability product or cyber insurance, if you consider ourselves only, when we take the policy, we also don't know what are the inclusions and what are the exclusions. But whereas in cyber liability insurance, most of the CISOs and director levels also, a few directors also given capacity building over that. what are the things need to be covered? Like if you look at the crime related, how you're going to take it to the policy, then directors and officers level. In if you look at MCA level, few things are covered over there. So in that also, what kind of policy inclusions are there and exclusions are there? And if you're coming to the professional identity, what kind of things are there? And if you look at a professional, commercial, general liability level, what kind of things are there? Like if you look at the individual privacy and security liability, corporate liability, and multimedia liability, and awareness level things, what kind of ISO certificates they have, or what kind of audits they are performing regularly. Based on that, the premium is going to be calculated. The more the risk, the more the premium will be there. So based on that, they
Yeah.
are doing regularly continuous audits. They are performing and doing the awareness from the board level to each individual employee level. That's what they are doing. CBTs, etc., etc., to reduce the risk. The final conclusion is we should have to get the less risk to our business, whatever business it is, and
Sure,
we
sure,
should predict the kind of things.
sure. Mr. Mathan, your views? Is organizations, do they really understand these terminologies, and are they really geared up to, or they're just going with whatever policy an insurance provider is saying deems fit for their organization at this point in
I
time?
think I think there is a lot more maturity required in that activity as we speak. There are organizations, at least, which have taken policies in the erstwhile era itself, right? At least 5, 6 years back, people have taken cyber insurance and continuing to be there in that. And there are, in the current juncture, people looking at it with the situation that we are in, trying to evolve into obtaining a cyber insurance for themselves. So there are early adopters and then there are the current adopters. For the current adopters, obviously, they would find themselves to be in a position that they don't understand many of these. There is also a need that CISOs should also get into understanding some of these legal perspectives that are written in the insurance, which typically has never been the domain aspect of the CISOs themselves earlier. Right. So the expectation from board and from organization is that CISOs do land up understanding some of these liabilities, limitations, and so on and so forth way too well. Today, there are well-informed CISOs. I'm sure Manoj would have come across. We do take some of these informed decision involving various teams, whether it is some amount of legal consultation required, external consultancy required for us to take an informed decision in what we are doing, right or wrong, right? But for organizations which are starting to do this now, it is still a long way forward for them. They would come across with, learnings as it happens in the next doors. So they would come across, yes, there was an insured company that went through a breach, but still the claim did not get settled for obviously
Yeah.
various reasons, which was left out, let out in the limitation clause, and so on and so forth. So it is for us to evolve as what would happen in the similar manner in the personal insurance as well, right? So none of us would have been privy to. So if you are a diabetic and if you have not disclosed it as appropriately in your insurance disclosure, your claim can be cancelled out, right?
Yeah.
Right, and so on and so forth. So those are learnings as individuals we have had at next door nearby neighbors getting to go through such claim settlement process, and corporates also will evolve. So as we speak, my honest opinion is I don't think we are as there yet, as
Yeah.
required to be equipped to handle the terminologies and limitations that are required in insurance as
Sure.
we speak.
In fact, Mr. Madan, to add to what you're saying, a large number of organizations probably are looking at something where they conduct a cyber risk index in their organization or a maturity exercise, and then they believe that that can actually support a cyber insurance policy. While I believe so, that is a viewpoint, but you also have to keep into consideration revenue of the organization, operations, geographical locations they're operating in, third parties that they're connecting to. Keep that as well, and then look at the cyber index. In other words, looking at a quantification model, and then look at what type of insurance we need to really work around. So it's just not the cyber perspective. It's a huge task. And I agree with you. It's just not the CISO who's geared up to address cyber insurance. Needs to weigh and consult and let's say come up with a think tank of the legal teams, the contracting teams, the CFO has to be also part of it, such that we understand what is the coverage that we can go in for. And then while we are talking about it, I think there is a question which has popped in here, specifically along the same topic. So Mr. Venkatraman Ganapati says, usually cyber insurance policy and its premium in the last decade was based on the security posture of the organization, which was defined within the four walls of a data center or DR. But now the situation is changed in COVID, where we do not have a set secure pattern of security posture. So how is the insurance company will assess this posture, which is fluid? In other words, now that we have many teams and people who are working from home, and if there's an assessor who is going to come in, previously he used to probably look at your index, security index, what you're doing at the data center, policies, processes that you put in, you will probably have a rating there, and based on that, he's determining. But now in the COVID situation, the people are at home, the endpoints or processing systems are in their homes safely, the applications and technology are in the cloud. And how will this help the insurance assessor in understanding what is the kind of, let's say, cover or premiums we need to go in for? And I think I'll pass it on to Mr. Milind to give a viewpoint, and then we can.
Prior to,
Yeah.
can I jump for a minute prior to Milind taking that up?
Please.
While you narrated that point on, I just missed to mention. Earlier, corporates were taking insurance cover, cyber insurance especially, when some of these large firms deliberated upon what is the quantum of insurance that we were to take. Some went to the extent of understanding, should we look at it as part of our market cap? Because today, if there is a cyber breach, the amount of damage it can cost to the corporate is what the market cap of the entire organization itself. So if you look at some of the large scale conglomerates here in India, or for that matter, any firm, there may not be firms, insuring firms adequately capable of providing the cover that is that were being looked at even. So the risk index that you referred rightly plays a very, very crucial role as to what do we take cover for. Do we take cover for the brand value of the organization, the market cap of the organization, or what do we take cover for, right? So that still is a large-scale evolving space for us to address.
I greatly agree with you as well. It's just not the market cap. In fact, data sources like Ponemo and Advisen, they talk about a number of other factors, just not market cap. In fact, they also look at number of data records that you have in an organization to look at, let's say, what is the kind of structure we need to put for our insurance. But I'd like to move on to Mr. Milind and get his views on the question posed by Mr. Venkatraman.
Yeah, before that, just a 30-second view on the terminology part, whether people understand it or not. It's a question of how much investment of time is done to understand these terminologies. Most of the organizations probably would go in for buying a cyber liability insurance more from the point of view of a compulsion of either the customer or maybe the regulatory requirement. Or maybe their board says that you should have it and so they will go in for it. But how much time do they spend in actually understanding the product? Is it being taken more as a compliance requirement, or is it being taken because someone really understands it in spirit that cyber liability insurance is a must for their organization? So those who have adopted cyber liability insurance in the past probably are well versed with the terminology, sheerly because of the time that has gone into their renewals of these policies and the discussion that they had over a period of time. For the people who are going to adopt now, I think they should invest time. They should try to understand this cyber liability insurance policy in spirit and then only go for it. Because there are certain tricky words like what are the wordings of the policy. Mostly you don't get to see the wordings of the policy unless and until you ask for it. Or the deductions that are being mentioned. They'll ask you how much deduction are you ready to bear. But that's a very tricky question. Ideally the answer should be zero, but that never happens. Coming back to the cyber score or the index of cyber security that the organization maintains, it also depends on what is the coverage of it. Most of the time you see the cyber security implementation is also not necessarily uniform across the board. There will be a different level of security when it comes to talking about the production systems. There will be a different, slightly diluted security when it comes to talking about the UAT systems. Maybe they are not so critical about certain testing systems because there's all dummy data and they don't think that they should invest so much into the security of such systems. So the index has to cover all these systems. You never know which system would lead an inroad for the hackers to come into the organization. So it is necessary that the index has to cover all the systems. If the index or the score only covers the production system or that which is fortified, that which is properly secured, then it is in a way an illusion that they are creating that they are very, very secured. And obviously, when such thing happens and they get lower premium because of a good score, but when the actual claim goes to the insurance company, they're going to figure out all these things, and that is where all that dispute would start, whether the claim can be admissible or not. So that's what I would like to say over here.
Thank you for that, Mr. Milind, and thank you for bringing the point out that today, because of regulatory requirements and because of, let's say, boardroom commitments, we are going in for cyber insurance policy without really understanding terminologies or, let's say, the finer details with respect to deductions and various other angles. But I think and I believe that typically there is a cycle around this. Year one, because of compulsion, people will go in. Year two, somebody in the organization will wake up and say, why are we paying so much year on year for this specific policy when we have not seen any breach around it? And probably then they will go into finer details and start looking at it. And I think that is a maturity curve. But to your point, do we need to keep ourselves knowledgeable today on aspects of deductions, inclusions, exclusions, such that tomorrow, if by God forbid we have a cyber attack and we have to go in for a claim, we are not really challenged by the insurance service provider and have a very, very difficult situation? I think that is something that we have to do today and not necessarily wait for a maturity curve in the learning process of cyber insurance. I'd like to just
add to it, Sony. One question I would like to leave with the audience and all those who have taken cyber liability insurance policies so far, they should ask themselves, do they know the claim process?
Okay, so the question is, do we need to
exactly know the claim process? I think they have understood this. Those who would say that I have engaged a broker or a consultant and they know the claim process, we should know that a lot more is required from their side to understand this policy.
Sure. Thank you, Mr. Milind, for that viewpoint. I think Mr. Srinivas wants to make a point. Yes, Mr. Srinivas.
Coming to the process of evaluating the policies, there are various steps we can understand while taking the policy. Like when I want to take the policy, I'll as per if you look at ISO 27001 or NASD framework, all audits we have performed. That kind of things we should have to keep ready with us. And once the underwriter came to us, then he is going to analyze what are the things are there, what are the risks are there, what are the vulnerabilities are there, where are the what kind of reputation things are there, what kind of transactions they are performing. Those kind of things he is going to analyze basically on that. Once that analysis is happened, he will review and he can discuss with our board team as well as CISO or CTO or CFO or CRO. He'll discuss and we can negotiate with them which are the inclusions, which are the exclusions, and all discussions we can have with the insurance broker or insurance product provider. We can have that based on that review. He will this kind of things he can include, these can be excluded, these are the things, a network level issues or asset level issues or transaction level or a data level, all we can discuss with him. Once that is done, he'll give the premium. This is a premium based on my understanding, and there's the risks as we prepared statement of applicability in ISO. Similarly, he'll also do all these things. He should. Some are underwriters are expert in IT, some are not there. So that's why there also we should build the capability. IT people become the underwriters also. That some gap is there. Sure. So that's where he is going to make it out. Once that is given, he'll submit the proposal to us. These are the services included. This is the premium. then accordingly he is going to give to us. So that's where
Sure.
we can enhance our knowledge.
Sure. I think the point that you made also resonates because as hygiene, we have to keep in mind some of these standards and frameworks like NIST or let's say ISO 27001. It is something like assuming some surveyor is going to come and look at my car for an insurance. I will probably clean it up a day before and make it look shiny and nice, hoping that there's no my at least IDV, I think it's called, is probably managed well. But in cyber, not really. That's probably the case because when an attack happens, it really is a challenging situation to work around the claim process, like what we spoke about. And I don't think there are too many organizations who have gone through that process of procuring a cyber insurance, have experienced a cyber attack, and gone through a claim process at this point in time. And God forbid it doesn't go that way. But I think it is going to be a challenging process. And I think Prasun had a view on the aspect of this risk and cyber insurance. Maybe Prasun, if you can give your.
Yeah, I have, I do have a very different opinion about cyber insurance and how it would affect us and how it would help us at the end of the day. To be very honest, I feel that cyber insurance is basic hygiene, and essentially what it does is, at least from what we see globally, is that it tries to evolve the entire cybersecurity posture from being a more regulatory driven, compliance mandate driven, to self-regulatory and self-awareness driven domain altogether. And most of the conversations that I hear from the panel and from the audience is largely around what the elephant in the room essentially is the definitions around exclusions, what would define as negligent behavior, and hence make the insurance non-applicable, so on and so forth. For example,
Sorry, I think we lost. So I'll continue till. Yeah. So let me continue. So from a broker and insurance service provider perspective, who do you think are the key stakeholders in an organization to push the cyber insurance stick agenda forward? Is it the CRO? Is it the CRO and CFO? Or is it CRO, CFO, and legal teams? At least based on your interaction, how has it been?
Larger team, our experience is that look, when it is looked upon by the larger team, including the business, you will have an effective program in place. The business understands very clearly that look, if something happens, what is the downside of that exposure playing out? And so that look, we can very well define. So some of the panelists were talking about what kind of limit is required. Say business interruption is one thing. If there is a material interruption, business team will be able to say that look, if 10 hours my digital sale is down, that look, how much is the impact to the net profit? So that is one of the aspects which is getting covered under the program. So that's the way which I tell you that look, the CISOs, CROs, and the legal team along with the business, which they can make a very effective decision about the product. Legal team obviously will vet the contract. CISOs and the CROs will be able to list down the exposures, and obviously the consultant will explain the product features and what are the customizations which can be carried out. And then we select the carrier on the basis of the claim. Claim is the test of this promise, which is sold in the form of a paper. So what carrier and what kind of a deductible will bring in, or the self retention will bring in good amount of premium, and overall the players, how we can bring in more players. So you were talking about the security postures. Earlier, security posture was one of the factors which was considered, whether you have a certification or whether you have got any kind of a, the framework adopted. That was one of the demonstrations that look, you are taking it seriously. Now the situation has changed. Now underwriters are looking into the trend. The trend means the initial or the immediate response to the COVID-19 was globally underwriters or insurers have reduced their capacity. Earlier, somebody was putting in $25 million. Today, they will not put more than $15 million. They have not seen claims, but it is a cautious response or I will say, reaction to the situation. But they are
Okay.
closely following the trend. The trend is basically that, look, which area, where, which industry, how they are targeted. On that basis, they would be taking decisions. So globally, that is what it is happening at this point of time.
Sure, sure. So on another note, I know it's not practically feasible, but I just wanted to check and see, is it possible for a company to go in for two cyber insurance from two different providers at the same time?
Yes, sir. There is something called the co-insurance. Basically, that, look, what happens is when you need a capacity in India, some of the at least the 5 or 6 corporations have got $100 million capacity. So one player can't provide. So you need a consortium, like in a credit business, multiple bankers will come. There will be a lead banker. The same way, it will be a lead insurer, and others will participate as co-insurers. So you can bring in, depending upon what kind of capacity which is required, you can bring in multiple players onto the.
Okay, so my question was, thanks for that viewpoint, but I also was looking at, I as an organization, can I go with two service providers for two insurance policies at the same time? Is it legal?
Yeah, you can have two policies. What happens is there is a principle in insurance which is called the contribution. These are indemnity policies. In life insurance, we can buy 5 policies, say, and we can get 5 claims. But in general insurance, when it comes to it is an indemnity. If your loss is 10 crore, you have got 2 policies, and 2 policies will respond to the limit of liability in proportion. So if one policy is 10 crore and the another policy is 5 crore, 2:1 ratio, which they will respond. But you won't get more than the loss what you have incurred. It is an indemnity. So both the policies will contribute in proportion to the limit what it is taken.
Thanks, Mr. Manoj. I think I have a question from Mr. Alex Samuel. How can we liquidate or ascertain value to things such as reputation loss or identify theft, etc. in cyber insurance?
Can I take this question, sir?
Yes, please.
So under the policy, when you look into it, there are 3 buckets, the coverage, which can be, listed down. One is the first party expenditure. The reputation loss, what the policy will respond to is whenever there is a newsworthy item about your company, whether it is actual or, baseless news, which you would require a public relations expert to brief the media at large. The policy will pay the public relations expenditure which is incurred by your organization to respond to the newsworthy item or respond to any kind of a breach situation which has happened. So that is what the policy will pay for it. Identity theft, if there is any kind of a damage which is claimed by any person against the organization, stating that, look, because of this compromise, I should be compensated, say, $1 million. In India, at this point of time, even under the Section 43A of the 2008 Act, it is unlimited liability. So, but the Indian jurisdiction won't give that kind of huge damage. But in the matured world, which you would see easily that, look, 200, 300, up to $1 million for any kind of identity theft damage to be paid. The policy pays that damage also.
Okay. Thank you, Mr. Manoj. I have a question here, and I think I'll pass it on to Mr. Mathan, and then others can take it up as well. The question is from Mr. Durgesh Prabhakar Sharma. He says, while taking cyber insurance policy during these times, what inclusions and exclusions we should look for? And last but not the least, what cover we should go for? On the cover, I really don't know how we can comment because it's based on multiple other factors. But typically, what are the inclusions and exclusions that are part of a cyber insurance policy, at least at the high level? Maybe Mr. Mathan, if you can give a view, and move on to Mr. Milind post that.
I think the best person to respond to this is Manoj himself than anyone of us, at least for this question, especially with regard to inclusion and exclusion. But the criteria that I would want to put forth from an experience perspective is that is not left to the choice of you at the first go. While the policy writers are the ones who are actually carving out what is called as the exclusion. What is important from an acquirer, as an insurance acquirer perspective, is to read through these fine lines in depth and understand what really are these exclusions that are being carved out in these policies. And if such exclusions or something that you wouldn't want the organization to take the risk of, you have the right to negotiate with the providers and ensure these exclusions are either removed off or adequately covered in a different matter, right? So it is not as easily as a direct statement for us to tell what inclusion and what exclusion to take care of. And exclusion exclusively comes from the perspective of the insurer as well, from their experience that they have seen the recent and the previous cyber breaches. So it is for their own cover, right? If such thing were to happen at that occasion, we would not cater to your coverage, right? That's where the
Sure.
exclusion is. There is nothing that is directly, we can give it in a one-line answer, but we can take some cues from Manoj.
Yeah, Manoj, if you can give a couple of exclusions, inclusions we need to look out for.
Yeah, sir, at this point of time, when the policy inclusions, which is very important, is what is the definition of a computer system under your policy? Because your computer system, which is expanded when you are remotely connected, bring your own device, because if it is a very tight definition, there can be a claim which can fall in no man's land. So these kinds of things are to be clearly looked into it. There are minute aspects when you are and in this kind of a situation. Otherwise, when you look into the coverage is basically first party expenditure, whether it is forensic is covered, containment, mitigation are covered. Whenever there is a breach, these are the important things to be looked into it. So very, very rightly that look, we start from there. Then public relations expenditure, notification and monitoring. These are mandatory requirements. So wherever there is a PDPI law which is there, so there is a legal obligation to notify whenever there is a breach to the each individuals whose information is breached, and as far as the monitoring for next 6 months time. Then whether the policy will respond to recovery as well as responding to the regulatory requirements. If there is any fine and penalty in the nature in civil nature, whether it is getting covered under the policy, and if there is a computer crime, whether any fund is lost, whether it is also covered. And the most important part is whenever there is a material interruption to my network, whether my loss of profit is getting covered under the policy. These are the major coverages. You can make lots and lots of coverages on the basis of if you're ready to pay premium, little bit expansion, which is possible under each of these sections. When it comes to the exclusion, the standard exclusions are if there is a dishonest or a fraudulent act committed by the CXOs, including the CISO, board of directors, partners, whoever it is. But if that exclusion is expanded to employees, then you have a problem. If a disgruntled employee commits any kind of a cyber or a computer crime situation, then it is not getting covered. So exclusion is to be read very carefully. Employee act should not fall under that exclusion. Any action which has happened prior to the inception of this kind of a coverage, that is an exclusion under the policy. So any kind of a I will say property damage or a bodily injury situation is an exclusion. But if you are in manufacturing, say you are in a power or a steel manufacturing company, that exclusion is a major problem, because if industrial control system is compromised, which leads to a fire or any kind of a situation which the outcome is a large property damage, then you have a problem. So there you have to look into it. So these are some of the exclusions, and most of the exclusions can be customized depending upon the exposure.
Thank you, Manoj.
Anthony, I would like to add to that inclusions and exclusions. If you look at the regulatory fines and penalties that can be taken into the consideration, as well as the legal representation when something happened, if you go to the court and kind of thing, legal representations as well as forensic costs also we should have to consider, because once it is done, if any damage or attacks had happened, what kind of forensic costs, whether it should be included or excluded, should be taken into the consideration. As well, business interruption loss and reputation, those should be included in the underwriting way. As well as another important one is intellectual property, whether you're developing an application or any mobile app, any kind of thing, whether it is infringement or a kind of thing, misuse or abuse kind of thing, trademark kind of thing, we should be included or excluded, need to be discussed with the underwriter. And unauthorized collection of data sometimes will be collected in unauthorized way. that should be excluded. As well, infrastructure failures because of telecommunication or electrical or mechanical failures, because our data center, those kind of things will be there. So in that case, if our genset or UPS, those kind of things are failed, whether should be included or excluded, those should be considered. So, and as well, when something happened, the infrastructure, the building kind of thing happened, should be included or excluded, need to be discussed.
Yeah, I think there are quite a varied kind of views that are there for inclusion and exclusions. And from my perspective, I don't think there's one person who can comment on it from an organization structure. They need to look into all these views and then come in. There was one question, and I'll wind up because we are also running out of time. The one question which was here was, is there a cyber insurance for an individual or a person? From what I believe and I understand, there are insurance providers who are providing cyber insurance cover for an individual or a person, especially now because of a lot of e-commerce businesses that are going in. However, the coverage and is a lot much more smaller when compared to the size of the cover that, let's say, larger organizations are taking. And I think from a takeaway of this panel, I think a couple of things that we have seen is we are looking at, we don't know too much about our claim process. We need to enhance the understanding if we are going for a cyber insurance on the claim process. There are aspects which Mr. Milind brought out on deductions, right? Those viewpoints with respect to numbers needs to be understood for people who are going for a cyber insurance. Aspects of going for two cyber insurance, what is the kind of ratios? While life insurance, you can take as many. In this perspective, what is the kind of structuring that we need to do? And the larger part of it is on a review of the inclusions and exclusions, primarily because there are various other kind of expenses. For example, loss or profit of an organization also can be covered as part of inclusions and exclusions. This aspect of, let's say, legal representation and forensic, Mr. Srinivas brought out, IP angles, which we also brought out because of the kind of IPs that so many tech companies are possessing. And I think most of these points are valid. And from a takeaway perspective, I believe that while cyber insurance is going to rise exponentially, because of the current working environment, it is really very much required for the CFO, CRO, the legal teams, and the business teams to come together to identify what type of insurance policies they need to go in for, keeping in mind the inclusions and exclusions, which means to say it's a huge knowledge curve that needs to be built for cyber insurance, and we should not wait only for a security tool or a technology or an index to gauge our let's say cover requirements. Any last comments from the panel here?
I'd like to just add over here. There may be few regulators who may have made this compulsory. There will be many regulators who have not yet made this compulsory for all those whom they regulate. But organizations should not wait for that compliance point to come. It is to be adopted in state. It is to be adopted so that you can transfer that risk which you are not in a position to mitigate or accept. And that is the reason why, instead of just waiting for the regulator to come forward and make it as a regulation, after which you have no choice but go in for the insurance, it is better to understand it right now and have that in spirit, is what I would like to suggest to the audience.
Thank you, Mr. Milind, for that viewpoint. And I think we are run out of time, and I have been very, I think it has been a very great time for me here on this panel, learning a lot much more than what a little bit I knew about cyber insurance. Having said that, I lead the cyber insurance business at KPMG, and we also work with a lot of clients, insurance service providers, brokerage firms. But I think the audience has learned a lot. And if there are any questions, I think the questions can be passed on to the moderators or the hosters, and then we can probably have the right individual respond to those questions coming in future. Overall, to the moderators, and thank you very much, dear panelists. It's been great talking to you.